Well, good afternoon, everybody. It is a huge red day all the way around. I mean, the market is plummeting. We are now back to levels that were before the election, and it does not look good right now on my screen. So, we are here to kind of panic slash manage this account, which, as you all know by the video that went out this morning, I screwed up royally. So, go back and look at today's video, which is yesterday's video, launched on the 10th. Maybe I'll put a card up here in the corner to save you the trouble. I've never really done that before, but I think I can figure it out. So, yes, we are not looking good. Look across the top here, you can see down 1,000 for the day, 1,100 for the day. We have no options buying power. We're negative there. We have no stock buying power. We're negative there. And for the most part, we're going to see what's going on. Today, let's see, Carnival Cruise Lines today, we are barely out of the money there. So let's close that right now while we can. So we'll even take a penny less. Or no, we're going to buy it back. So we'll pay the 17 cents. Send order. That is filled. So we're out of Carnival Cruise Lines. Basically at 17 cents. So let's update that real quick. Today we closed Carnival Cruise Lines for 0.17. We did, in fact, 0.12 there. And so we made $11.75 on that total. But the good news is we are out of it. So let's see what else we have to do here. The good news is we got a little options and stock buying power back. We're not buying anything. We have some other fires to put out. What is Celsius doing today? That's one that closes today that we're in danger of being assigned on. It's 26.93. We are $1.50 in the money on this because we have a $28 strike price. What did we pay for? What did we get paid for Celsius this time? I want to say it was a good bit. I could be wrong. Let's look at this. So we closed that. We bought it back at 23, made $65 there. And so we closed that one for a profit. Then we took a second one where we took another $43 premium. So all in all, we are, well, in the neighborhood of $110 we've collected on Celsius. So that is not terrible. $107.62, not counting whatever if we let it expire, there are no additional costs there. So we're 107, just rounded up to 108 for fun. And we are currently $1.50 out. So we're gonna be losing about $40. Basically, we'll be acquiring those shares about $40 below what we would have wanted on that, but not the end of the world. We can let that transpire the way it does, or the market does a crazy rally by the end of the day. We've all seen stranger things happen. So we are, I believe, the assignment of Celsius will, well, no, it says we're down 103 on this here. So we're not, okay. So we could get out of this right now and probably still have a $6 or $4 profit overall. Let's do that. Let's just close this position for $1.60, review, send order, and filled. So let's get in the chart and see what happened there. So we're going to say we close this today at 1.6 and 0.12, and overall, okay, we did. We have that $50 loss roughly that I was talking about. So yeah, that is our first official losing position. That is in the books documented. for Celsius, and let's take a second to mourn my stupidity and move on. All right, where are we at positions now? So, okay, so option buying power back to 900, stock buying power back to 1800. But the good news is the fires are out because the next activity that is a potential problem here is AMD, which is down around 115 right now, $10 below the strike price. So that would be $1,000 in the hole if we were assigned today at that price, but that is manageable. We can work on that. Again, I'm not worried about this. This is a September one. So let's think about this January 31st. That is 21 days from now, 3 weeks from now. I can almost promise you that AMD will not be at 115. It may not be at 125. Who knows? Could happen. Could also be, at 100. We got to figure that part out. But let's see here. What's the best way to do this? I'm not going to close these both today because that will again put us down in the $1,200 range loss. Not excited about that. And this is September, so that's not that big a deal. In fact, we really got to start playing this one the right way. We need to open some covered calls on this because that was the whole idea of selling a covered call. If we're going to keep it, we need to have covered calls going against it so we can be playing the poor man's covered call properly. Now, in the meantime, we have this haunting us. So let's see what the short term solution might be for this. Let's see if we just roll the expirations. We can roll out to, we can roll out 1 week for 85 cents, 2 weeks for $1.33, or 3 weeks for, oh, that's more than 3 weeks, isn't it? That is about 42 days. Okay, so this is, oh, excuse me, I was wrong. We can roll it out 1 month. We can a little under a month, a little over a month, or a little farther. What is the best math here? So 28 days. Let's just man, I can't keep that open. Oh, I can keep that open. Oh, I can't keep it open with the calculator though. All right, let's just do it in our heads quickly. Roll expiration. So here we go. We got 4 weeks, 82 cents. That's 20 cents roughly a week. This one here we have 5 weeks. $1.22. That is very similar. Little bit better payoff actually, because that is 5 weeks. So nope, that's the same price basically. 42 is 6 weeks. 6 weeks, $1.50. That's not as appealing. That's 15. No, that's divide by 6, Mark. Okay, so 75 divided, that's 25 cents. This is the best deal so far. Because would be going on a little farther, and 7 weeks. Okay, closer to 30 cents. Okay, so you get 30 cents a week by going out to late February. I'm not sure that I want to do that. Let's just take, that's 2, 3, 4 weeks. Oh man, decisions. All right, $82 for 4 weeks. Push that out. What happens if we decide we want to, just out of curiosity, 78-cent credit, we roll down. Now it just starts to disappear quickly. Hmm. Let's clear that. Go back. AMD. Can we roll down? What happens if we want to roll down? What would happen if I want to roll down to a $120 strike price? I would have to pay $337. Let's highlight that and bump it out in time. And go out to 28 days is 253, 35 days, 42. How far do we have to go out to get this into be a credit? 97 days. We roll out 97 days. We could gain $1 and go down $5 on the strike price. And that puts us out to April on that. We're out to April, down to $120 strike price. Let's bump that down to $1.05 and send it. And it says working. So let's replace that. We're asking for credit, so let's get that down, unlock it. That's $1.05. All right, saying we're willing to do it for $1 credit. Oh, it's bouncing around rapidly. Let's send it off at $1. There we go. We're filled. Okay, let's look at our positions now. Okay, so we've collected another $1 on the AMD. We're going to hop over to AMD, see what this damage control kind of looks like here. And I'll quickly look here at my phone. So we bought this AMD. We closed that today for, it is telling me our price on that was 12.20 and 0.12. Hey, we never filled that out. 2 and not looking good. We also today sold a new put for way out there, April 17th. April 17th. Okay, so the 18th must be a holiday. Strike price 120, so that's a big perk. We're down $5 there, and the price that we collected for that was $13.20, and that's our dollar gain there. And 1.13, and let's see where we're at. So, yeah, I think something's a little wrong here, so gotta do some math. Closing cost. Should these be entered as negatives? I mean, is that what happens there? No, that doesn't make sense. Gonna work on the chart still, guys. I'm sorry, it's just haven't had a whole lot of time to dedicate to fixing that because, well, as you know, I've screwed up the account a little bit here. So not the end of the world. We are down $1,700 or $1,400 for year to date. Kind of scary. The good news is no major decisions need to be made until February 21st. We're approaching that at this point in time. But let's do this. Let's take a minute. Let's look at the AMD. Let's look at the AMD trading. We do not want to be there. We don't want to be there. We don't want to be there. What do we got here? Let's take a look and see. Wow, all of them are open. I don't believe I did that, but all right. So let's see, January. We want to look at selling some covered calls because that was the whole idea of this whole poor man's covered call situation. Let's go out to the week before earnings and see what we can do. We can collect, we are on the call side and the buy is selling. So this is what we, or excuse me, want to sell, the bid is selling. And we want to look at what we can do over here. If we buy something too close, let's look at deltas. What do we got here? Let's go down a little bit in delta. 30 delta here. we can collect 275 probably in the 30 delta range. Let's just go up to the 125 and see what was our covered our long-term leap was for 115. So we definitely want to stay, above that, but we're going to need to manage this as we go anyway. So we're looking at January 31st. So between now and the end of the month, 3 weeks from now, we can collect $245. Let's drop it down to 240 here, and we can probably pop that into the account. Have to manage it again as we move. We will roll these things, roll them out, roll them up as the price lifts, which is what's expected. To be honest, I still have a long-term positive outlook on AMD, and yeah, I mean I'm obviously putting money into it, so either I'm right or I'm wrong. That's what happens in the market, isn't it? All right, so all right, what is the unlock price here? So 244 is the mid price. We'll drop it down to 240, collect $240 right now. Bam, done. Look at that. We got a little more money in the option buying power and the stock buying power. The account is no longer in danger of any media assignments and whatnot. And so, yeah, let's go back over to our chart. And we now have entered today into, we have sold a call, which is what we should have been doing from the beginning because I mixed up my strategies in my head. And the expiration on this is going to be the 31st, and I want to say it was the 125, and we have one contract, and the price was 2.4, carried over 1.13, and there we go. So we are slowly whittling down some damage here. If you think about it, original price on the original covered call, we paid $2,851. Okay. And so we're going to whittle that down here if we have to, $240 at a time, and hopefully the price appreciates and catches up with us and there's a bigger profit in the long term. But yeah, this is where we're at today. I am not excited about my timing in starting this account, but what can we do? Let's look back here just real quick here. We have started this account December 9th. So we were up here, and you can see the market has done nothing but gone down since we started this challenge. So we have our work cut out for us, but we can make it work. We're just got to not make any more stupid mistakes like I did at AMD. We do not want to blow up this account. But to be honest with you, what I'll say half of what we are down right now is probably my fault with the messed up poor man's covered call on AMD. But the other half, I've got to give it to the market. The market's just down, and there's nothing we can do about that except for try and work with it and manage it best we can. So anyways, it is Friday afternoon. You guys have a great day. Enjoy your weekend and like, share, subscribe, hit the little alert button, and I will see you guys next week.